Ethereum is no longer just a cryptocurrency. It's evolving into the backbone of a new financial world, one where code, contracts, and value move seamlessly across borders without friction or intermediaries. In this landscape, one company stands out for its audacity: SharpLink. While most corporations are still dabbling, hedging, or waiting for regulatory clarity, SharpLink is going all in. But is this the smartest play of the decade, or a colossal gamble? To answer that, let's dive deep into their strategy, the risks and rewards, and what it means for investors everywhere. Ethereum, or ETH, ranks as the world's second-largest cryptocurrency, trailing only Bitcoin in market capitalization. But to compare the two is to miss Ethereum's unique role. Bitcoin is digital gold, a store of value, a hedge against inflation. Ethereum, on the other hand, is the world's programmable blockchain, a decentralized computer, a global settlement layer, and a launchpad for innovation. It's the home of smart contracts, decentralized finance, DeFi, non-fungible tokens, NFTs, and tokenized assets. It's a platform where programmers and visionaries build new kinds of markets, games, and organizations. As artificial intelligence, finance, and blockchain technology begin to merge, Ethereum finds itself at the epicenter of this transformation. It's where algorithms can transact, settlements are automated, and ownership is redefined. In this context, SharpLink's bet is not just a financial wager, it's a strategic pivot into the future of digital commerce and decentralized markets. But before we unpack the reasons behind SharpLink's decision, let's confront the elephant in the room: Ethereum's long-standing challenges. Ethereum's rise has not been without turbulence. The network has faced periods of severe congestion, resulting in sky-high gas fees that have priced out many users. During market surges, simple transactions could cost tens or even hundreds of dollars in fees. Developers and users alike have voiced frustration, and many projects have migrated to faster, cheaper blockchains like Solana, Avalanche, and Binance Smart Chain. These competitors tout blazing transaction speeds and minuscule fees, threatening Ethereum's dominance. Investors have wondered, can Ethereum overcome its technical hurdles and retain its lead, or will it get left behind as newer platforms scale up? SharpLink's decision is remarkable precisely because these doubts persist. Rather than hedging its bets, the company has chosen to stake its entire financial infrastructure on ETH. As of July 2025, SharpLink holds over 280,000 ETH, making it the largest corporate holder, outstripping even the Ethereum Foundation itself. Their ambition is clear: accumulate as much as 1 million ETH, which would represent nearly 1% of all circulating Ethereum. So why this level of conviction? Let's explore SharpLink's rationale, beginning with the technological leaps Ethereum has made. The first major reason is Ethereum's transition to proof of stake, a monumental upgrade that's reshaped the network's capacity, security, and environmental footprint. In September 2022, Ethereum shifted from the energy-intensive proof-of-work model to proof-of-stake, a move dubbed the merge. The impact was immediate. Energy consumption dropped by over 99%. With validators staking ETH to secure the network, Ethereum became greener, cheaper, and more scalable. This new model unlocked staking as a revenue stream for institutional holders. By staking their ETH, SharpLink earns passive income while simultaneously helping secure the network. Since launching their staking strategy in June 2025, they've already earned 322 ETH in rewards, a testament to staking's potential as a reliable yield generator. Over 99.7% of their ETH treasury is staked, maximizing both returns and network security. But the transformation doesn't stop there. Ethereum continues to evolve, with ongoing upgrades focused on scalability, efficiency, and usability. The Dencun upgrade in March 2024 introduced proto-danksharding, a feature that dramatically improved transaction throughput and reduced costs. Looking ahead, the Pectra upgrade, set for mid-2025, promises even higher staking limits and a smoother user experience. These technical milestones reinforce SharpLink's confidence that Ethereum is not only catching up, but setting the pace for global blockchain adoption. The second pillar of SharpLink's strategy is the explosive growth of DeFi and tokenization, much of which is anchored on Ethereum. Over 70% of DeFi's total value locked resides on the Ethereum blockchain, making it the primary infrastructure for decentralized lending, trading, and asset management. The world's biggest financial institutions, JP Morgan, BlackRock, and others, are experimenting with tokenized bonds, funds, and assets on Ethereum, leveraging its programmable nature to create new financial products. SharpLink sees Ethereum not as a speculative asset, but as the infrastructure for tomorrow's capital markets. By integrating their products and services on Ethereum, they're positioning themselves at the heart of a global shift from analog finance to digital programmable finance. In this vision, value moves at the speed of software, with transparency, security, and interoperability baked in. Supporting this ecosystem is Ethereum's unparalleled developer and user community. With over 5,000 active developers building every month, Ethereum remains the #1 choice for innovation in Web3. From NFTs to Web3 gaming, Layer 2 scaling solutions to decentralized autonomous organizations, DAOs, the network is a hive of creativity and experimentation. SharpLink recognizes that technology alone doesn't guarantee success. It's talent and community that drive unstoppable growth. By aligning with Ethereum, SharpLink taps into the largest pool of blockchain developers and entrepreneurs on the planet. But this isn't just theory. SharpLink has restructured its entire business model around Ethereum, making bold moves that signal deep conviction. They're not merely holding ETH as a treasury asset. They're integrating their core products directly into the Ethereum blockchain, leveraging smart contracts and decentralized applications to deliver new value to customers. Their capital allocation is laser-focused on ETH staking, targeting long-term yield and network resilience. SharpLink is also forging partnerships with DeFi and NFT projects, aiming to scale their reach and influence globally. This is not a passive investment. It's an active embrace of a new economic system, one powered by Ethereum's open, decentralized infrastructure. The appointment of Joseph Shalom, a former BlackRock executive, as co-CEO, reflects this commitment to bridge traditional finance with decentralized finance. Under Shalom's leadership, SharpLink is expected to accelerate Ethereum adoption within institutional capital markets, pushing the boundaries of what's possible in corporate treasury management and blockchain-based financial products. And the timing may be just right. The crypto markets have weathered a storm of volatility, but signs point to a new growth cycle. Ethereum's upgrades have made the network faster, cheaper, and more attractive to developers, enterprises, and investors. Standard Chartered recently raised its year-end Ethereum price forecast to $7,500, citing increased industry engagement and a rapid expansion of Ether holdings. The bank projects that the stablecoin sector could grow 8-fold by 2028, which would dramatically increase Ethereum's usage and fee revenue. These bullish forecasts suggest that Ethereum is not only surviving, but thriving as the foundation of a new financial ecosystem. Yet, with great ambition comes significant risk. SharpLink's strategy, while visionary, is a concentrated bet. By holding such a massive share of ETH and staking nearly all of it, the company exposes itself to price swings, regulatory shifts, and unforeseen technical challenges. If Ethereum falters, faces a critical vulnerability, or loses its competitive edge, SharpLink could be left holding the bag. This is not diversification, it's conviction on an epic scale. For investors, the question is clear and pressing. Do you see Ethereum as the future of finance? Are you willing to bet that decentralized platforms, smart contracts, and tokenized assets will reshape how the world moves money, invests, and builds wealth? SharpLink's wager is a public declaration that the answer is yes. But each investor must decide for themselves, based on their understanding of the technology, the market, and their own risk tolerance. If you believe that Ethereum will shape the financial future, Now's your chance to act. Share your conviction, your questions, and your vision with others. The world of crypto moves fast, but those who understand the fundamentals and the bold moves being made by industry leaders will be best positioned to thrive. If you found these insights valuable, take a moment to share this content with others who care about the future of finance. Stay informed, stay curious, and keep exploring the frontier of crypto, decentralized markets, and global innovation.